Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour Show. We've got a bunch to talk about. As a matter of fact, there is so much to talk about. I didn't know what to talk about today because there was just so much green in the market, so much news. It seemed like a bunch of relief from Friday's overreaction. That today was a pretty good day in the market. There were some that were down. Don't get me wrong. Not everything was green, nor should everything be green. But it was a pretty cool day. There was a lot of news in the market. So we're going to go over it. But remember, the most important thing, what's on your mind? If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show to the best of my abilities. We'll look at the stock chart for any technical analysis that we can do on it. We'll look at the financials to see how healthy it is. So please don't be afraid to do that. That's what this show is for. It's for you. All right, I'm just going to jump right into it so we can get through this. I've got a bunch to talk about. Oh, crypto bounced this yesterday. Finally, it bounced. So that's looking healthy and good. So yeah, we've got a lot to talk about. Starting off right quick. Remember, this show's for you. Okay, now that I said that, I don't know why I did that, but I did it anyways. Okay, all three main U.S. averages partially offset Friday's losses today. The Dow traded 0.7% higher, the S&P 1.3% higher, while the Nasdaq rose about 1.9%. Investors tried to assess the impact of the Omicron variant on the economic recovery and monetary policy. Many countries, including the U.S., have already moved to restrict travel from Southern Africa, while vaccine makers are also investigating whether new formulations are required to fight the spread of the new variant. Elsewhere, investors kept an eye on a batch of economic data later this week, such as the jobs report on Friday or the ISM manufacturing survey. Now, all 11 sectors did finish the day with gains in the green. 5 sectors added more than 1%, with technology leading the way up 2.6%, consumer discretionary 1.6% in the green, and utilities were up 1.6% as well, finishing in the lead. The technology sector built on its gain as the day went on, with chip makers leading the way. The PHLX semiconductor index climbed 4.1%, with all components rising at least 1%. That's pretty big. The consumer discretionary sector benefited from a strong showing in Tesla, and we're going to talk about some news about Tesla in just a moment. They were up 5.1%. Now, let's get to cryptocurrency and Bitcoin. So we're going to hop over here to TradingView. It's where I do all of my technical analysis. All the charts that you see are from TradingView. There's a link in the description for a free account. Okay, Bitcoin, BTC, USD on the chart, and you've got a couple options for where you get your data from. Okay, here's Bitcoin right now. It's at 58,329.28, and it's sitting right there for just a moment. Okay, now 21. It's in a falling wedge, but this bounce was significant because it got down to a low of 53,642. Now, that was a worrying moment for a moment, getting down that low, but it was okay. It bounced off of this bottom trend line that you see in this falling wedge pattern. Really nice. Now, we have 4 data points to connect this bottom support line. 2 up here at the beginning, which were back on October 27th and 28th. We have 2 down here. We have the 26th and we have the 27th. Now, the past 3 days have been green for Bitcoin, a nice bounce. Now, it got to the top of this wedge pattern here, and we've got 3 contact points now. So this is confirmed. We had the first one being on November 10th, the second one being on November 15th. And then today marked the 3rd trifecta. We need 3 points of contact or more for a trend line to be placed, basically. The more contacts that you have, the better it is. So 3 is the minimum. If you only have 2, then it's really just a 50-50 chance of which way it's going to go. So you really need to have that third one to help confirm what the trend is doing. So we have it confirmed here with today's hit on that resistance line and then falling back down. Now today, it got as high as $58,908. And that's about right where this resistance line is for Bitcoin. Now, if Bitcoin does break above this, what we're going to need to see is, of course, volume is going to have to rise, right? But look at the RSI. Now, Bitcoin typically runs a bit on the hotter side on the relative strength index, the RSI. It's sitting at a 42.54 right now. 42 is a pretty low number for Bitcoin, even with this bounce that we've seen. This is a low number. So to break above this resistance, we're going to have to see this RSI rise up and get up here to, let's see, back here at the very peak of this wedge pattern was November the 9th, and it was at 65.06. So we're going to need to get that RSI back up to 60, 70, maybe even 80. That would be a pretty big and bullish ride if it did reach that height. Now, back here on the last rally that we had, starting back here on September 30th, running all the way up to the 20th of October, the RSI was 75, 73, 78, 77, 76. It was all within the 70 number. So that's what we need to see to break above this resistance. And right now, again, it's at 42.58. We need that going up. And it looks like ever so slightly from yesterday to today, that RSI is slowly starting to turn. It's been on a flat bottom here during this last week and a half or so of trading sideways. And it looks like it's just trying to turn and point in the upward ascending direction there. So that would be a really big kick in the pants to get Bitcoin above this resistance level. Okay, let's look at Ethereum. ETHUSD. And then I use Coinbase for the data. Now, Ethereum is in a similar pattern, but not quite. It's a little more on the moving sideways direction and less of a fall like Bitcoin had. As a matter of fact, if we look at this Ethereum, it had this one 10-day drop right here on this red candle, but the past 3 days it has been green. It's been moving up. But if you notice this bottom support line right here, it's pretty flat, but we only have 2 data points so far on this bottom trend line here. So it's really just, again, it's 50-50. It's not really confirmed. So this bottom support line, though, it's flat. When we looked at Bitcoin, that bottom support line was in a downward direction, right? So a little different structure in how Ethereum and Bitcoin are setting up right now, with Bitcoin having a deeper dive and then, of course, needs a sharper rise, where Ethereum is more bouncing around pinball style in its areas right now. But it got up to a high of 44.66 today. It's at 44.59 right now. So it's just a few dollars off of its high for the day. And again, we've got a confirmed resistance line here, keeping Ethereum down a bit. We've got several contact points on here. Starting back on November 10th, we have another one on November 12th. We have a third one on the 15th, a fourth one on the 25th, a fifth one on the 26th, and then today the candle is just starting to nudge up against it. Will Ethereum have enough to break through? I don't think it does at the moment. If we look at the relative strength index, it's at 48.29, which is a bit on the low side for Ethereum as well. It also runs hot. This entire rally right here that we saw beginning way back on September the 29th, all the way to its peak on the 8th of November, the RSI was up in the 60s for Ethereum, 68, 65, 67, a bunch of 65s there. So it runs up in the 60s, 67, and so forth, with it being 48.29. That needs to come up as well. And that's kind of obvious, but just pointing out the levels that it needs to get to in order to really push this rally and break that resistance barrier. All right, there's Bitcoin and Ethereum. Now I'm going to run through a few of the notable movers or had notable news. So kind of a rapid fire here with a couple of them. And then I want to go a little deeper talking about Twitter and what the whole shakeup with Jack leaving as CEO has to do with what Twitter may end up doing in the future. And I also want to talk about Li Auto. We talked about that in the Catalyst Watch video from last night, the most important video I do all week, the Catalyst Watch video that comes out Sunday evenings. There's a link in the description below if you want to catch it and watch it if you have some time. Really valuable information. So Li Auto was part of the movers that we were talking about in that video. All right, first up is Matterport. Ticker symbol is MTTR. They did an outstanding job today. Matterport was up 21.2%. This is, again, a company, every time I bring it up, I say it's a company that can't be kept down. When I made a video on it, way back here about October the 28th or so, it was just in this first symmetrical triangle right here, and it hadn't broken through yet. And I said, investors, you're missing it on Matterport. Really that simple. I thought investors were undervaluing Matterport at the current price that it was at. I mean, it was under $20 at the time. And now it has been on this beautiful run. It's broken out of 3 symmetrical triangles if you count today's breakout. Of course, I don't have that marked on the chart here, but I can see that technical structure within those candles. There are 3 symmetrical triangles that Matterport has broken out of in a row over the past couple of months. All right. So Matterport, a big one again. Now, another one is Aurora Innovation. Ticker symbol is AUR. They had this massive run. I did a video on them way back on November the 8th, not that far ago, but that was before it had really caught on. And in that video, I said that it would be a barometer for robotaxis, for autonomous driving technology. What would investors think about it? And it took off. It was a really, really crazy run. Well, it bounced today from a steep fall that it had had over the past few sessions, up 8% today. So that's good to see that they did bounce. And they've got a really nice support line starting to form right here. We only have 2 touch points with the candles. But that support level is right around the $12 mark or so. So it is getting support down at that level. All right, moving off of that, more news related on stocks. Meta Platforms, Facebook. Meta Platforms, Facebook. Which is it? Anyways, ticker symbol is FB for Meta Platforms, previously known as Facebook. They were up 1.4% today, but they announced today that they are postponing the ticker symbol change until Q1 of 2022. Really, that's it. So instead of being Meta, M-E-T-A, they're going to remain FB for the ticker symbol for the next couple of months. All right, another company that made some news today, some pretty impressive news from a company that has really turned it around, Hertz Global. Ticker symbol is HTZ. You remember they were in the headlines because of the deal with Tesla. They were up 5.99% today. They authorized a share repurchase program of up to $2 billion of the company's outstanding common stock. That will provide a lot of momentum to push the stock higher. Whenever a company does a share repurchase type of program, they are literally buying their own stock, okay? It's the opposite of when a company wants to raise money, so they issue more shares onto the market, which is a diluting factor, right? When a company offers more shares on the market, now your share may become worth a little less when they do that. This is the opposite of that. Excuse me. When a company buys its own stock, all right, it's the opposite of that. So your shares aren't being diluted. Your shares are growing. But it's a really good sign that a company is financially strong. Otherwise, they wouldn't be doing this. They wouldn't be spending the money rewarding investors for holding their stock. So that was pretty cool. Of course, the vaccine makers were in the news today, but one that I found quite interesting because there's a lot of controversy around what's happening. And I'm just going to put Pfizer up on the screen here. Ticker symbol is PFE for Pfizer. Okay. Now, the reason I'm bringing Pfizer up, they were down 2.9% today. A judge blocked President Biden's vaccine mandate for healthcare workers in 10 states, according to The Hill. I find that as a very interesting move on something so controversial. Should vaccines be mandated or not? If they are not mandated, maybe less people will take it. That's a possibility, and that's what could bring a vaccine manufacturer, excuse me, sorry about that. Excuse me. I apologize. Okay. That's what can bring a vaccine manufacturer their share price down because they won't be selling as many vaccines. So just want to point that out there. Another company that should have done better than they did today, Shopify, ticker symbol is SHOP. Shopify was down today by a 0.5%, 0.61%. They had incredible news, but they were down. Now, they announced that a record-setting Black Friday for Shopify, with sales of nearly $2.9 billion from the start of Black Friday in New Zealand through the end of Black Friday in California. Okay? That's $2.9 billion in 24 hours for Shopify. Why didn't the stock move higher on that incredible news? Sometimes the stock market does not make sense. This is one of those times. Now, its RSI is at 49. So it's not like the stock was up at all-time highs or the stock was overbought in any way, shape, or form. And it is sitting right under its 21-day moving average. That's interesting to me. And today, it's been using that 21-day moving average since earnings to kind of act as support. And today it's below it. I just don't understand sometimes how companies, maybe people didn't hear the news. Maybe, I don't know. Maybe people heard the news about retail sales being down as for all retail sales as a preliminary report. Maybe they heard those headline numbers and then thought, well, Shopify is in there too. Well, Shopify wasn't part of the overall what the market did as a whole. Shopify was a rarity that did exceptional. All right, moving off of a weird one, Shopify. Let's go to Tesla. TSLA is the ticker symbol for Tesla. They were up just over 5% today. They are still in a confirmed symmetrical triangle, which means this one could break out with some explosive move. Now, Tesla is going to begin production in Germany next month. Next month. That is huge news for Tesla. We've all been watching the Berlin factory being built, and they're going to start production in Germany next month, in January. Start of the brand new year, and it'll be a fresh new year for Tesla to try and break their records from this year, right? So that was pretty good news, and that was according to a report in Bloomberg. Also, there was another bit of news on Tesla that Tesla is using AMD chips for its Model Y cars, and that was according to a article in the Times of India. Yeah, pretty interesting, huh? AMD chips. Okay, Tesla, nice one. All right, moving off of Tesla. From yesterday's Catalyst Watch video, which I say it every time, it's the most important video I do all week. Everybody should watch it when you have some time. It talks about this week's or the upcoming week's catalysts. What stocks are ready to move? And I don't always just share what stocks are ready to move up. I also share what stocks to stay away from that could move down. That's why it's such an important video. But some of the performers that I had set for today were like Hive, Hive. It's a blockchain company. Excuse me. I don't know why I'm getting a little hoarse here, my voice. Hive was up 3.7%. Now, they had a lot of options contracts on them, and they move in the same fashion as Bitcoin. When Bitcoin goes up, typically blockchain mining companies, they also go up. That's what Hive did today. That's what Hut 8 Mining did today. Another company that I talked about yesterday was GoEV, which is Canoe, GOEV. Canoe moved today, and it's been moving. It was up another 5.48% today. It's been moving a lot recently. And another company that I said had a lot of potential due to an overreaction was Anaplan. Ticker symbol is PLAN, PLAN. They were up 3% today. They had this big overreaction and sell-off on earnings. And this is one that I did not pick out. One of our awesome Patreon members sent this to me and said, hey, take a look at this if you have some time. Looks interesting. And it is. It is very interesting just because of the overreaction to selling on earnings. Their growth in subscribers slowed by 6%, but they're still growing by double-digit numbers. So up 3%. And then the other company that I talked about in yesterday's Catalyst Watch video for today was Li Auto, ticker symbol LI. Li Auto had their earnings today. They were up 6.4%. I said in the Catalyst Watch video that I didn't expect much from Li Auto. That's an exact quote. I didn't expect much, but they did move 6.4%. So they did pretty darn good. Okay, this morning, I want to talk about Twitter here, okay? And then we're going to come back to Li Auto. TWTR for Twitter. They had a weird day, a very weird day, okay? They've been in a downtrend here, especially since their earnings. But before that, they were trading down. They traded sideways, approaching earnings, maybe hoping for something good. They weren't sure about the Apple thing, right? The ATT, the Apple being able to allow iPhone users to not be tracked for advertising. Yeah, that hurt Twitter. So let's talk about it. This morning, investors look to be all in on Twitter because shares jumped 11% on reports that Twitter's CEO, Jack Dorsey, would step down. However, a sell the news reaction occurred after it was confirmed that Jack will no longer be at the helm, and that's effective immediately. He'll still be on the board, but effective immediately, Jack's out. He's not CEO. Jack did not elaborate on his reasons for stepping down, only saying in a memo that he believes a founder-led philosophy is severely limiting and a single point of failure. The former CEO noted that he worked to ensure that Twitter could break away from its founding. Although never stated in his resignation letter, perhaps Jack is leaving to focus on his other company, Square. Ticker symbol was SQ for Square. They did about the same as Twitter did. They were flat today, while Twitter ended up down 2.7%. And they're still going down a little bit in after hours. But could he be more focused on blockchain technology, cryptocurrency, and finance with Square and not so much with Twitter? And that's a reason for him leaving? Nevertheless, regardless of the short-term outcome in the stock, Twitter, I'm talking about now, due to the change in leadership, I do not expect much to change in the long-term goals of Twitter that they reaffirmed during their Q3 earnings call in late October. This means that by the end of the year, fiscal 23, Twitter still expects 315 million monetizable daily active users, or DAUs, up from its current number of 211 million, and annual revenue of around $7.4 billion, up from an expected total of $5.1 billion in fiscal year 21. Recall that during 2016 and 2017, Twitter shares hit all-time lows as numerous members of its leadership team left the company, while monthly active users, MAUs, while that growth was slowing significantly, with quarters seeing MAUs declining. Revenues were also failing to exceed analyst expectations. The company saw multiple periods of declining revenue. A significant factor in the lackluster revenue growth was something of an inability by Twitter to grow ad revenue. In fiscal year 2016, ad revenue fell 0.5% year over year, with a slight improvement of 1% year over year in fiscal year 2017. However, in fiscal year 2018, Twitter's headwinds turned into tailwinds, and ad revenue leaped 23% year over year. That momentum only continued in fiscal year 2019 and fiscal year 2020, as ad revenue jumped 12% and then 31% for both of them. This helped lead total revenue to positive growth again, including multiple quarters up over 20% year over year. Overall, today's mixed reaction shows that investors do not expect much to change over the next couple of years. Jack intends to remain on the board until mid-2020, helping with the transition, which should alleviate a lot of the uncertainty that typically follows the departure of a company's founder. Twitter is still in a solid position to continue growing its monetizable DAUs despite Apple's recent changes to ad tracking. given Twitter's global presence. However, its forward PE ratio at 50 times is quite rich, especially compared to Facebook's, Meta Platforms' forward PE ratio at 23 times. This could lead to significant selling pressure if tech stocks were to fall out of favor. Okay, and that's what I think about Twitter. I don't think there's going to be much change in the short term. Their long-term goals are still intact, but a new leader is always a tricky one. Are they good? How's their track record? That's something I haven't looked into yet. But if their track record of leading is good, then that typically continues. And typically, companies don't like to pick leaders who don't have a good track record. But even those with the best intentions and prior track records of being successful sometimes just don't work out. They're just not a fit for the company. So it's always a weird, like when you're going through your teenage years and I don't know. You know what I'm talking about? Uh, they'll have some growing pains with the new leader, but I don't know. I don't expect much from Twitter. They are declining, but they are still growing year over year, so it's worth noting. All right, moving off of Twitter, I want to talk about Li Auto. All right, so let's pop Li Auto back on the screen. Ticker symbol LI. Again, significant pop out of the symmetrical triangle, which kind of broke. It was like a false pop out, and then today's earnings shot it out 6.4% today. Now, like I said in yesterday's Catalyst Watch video, links in the description if you haven't seen it yet, I don't talk much about China-related stocks. I do mention the EV stocks like Li Auto or XPeng or NIO when there's some relevant news. So Li Auto, it's your turn. Now, I didn't expect much, and that's what I said in the Catalyst Watch video, but the stock did move over 6% today. Li Auto is charging higher after reporting strong Q3 21 results that exceeded expectations, while also providing upside Q4 21 revenue guidance that equates to impressive year-over-year growth of between 113 to 127%. Since the company announced in early October its quarterly delivery surged by 190% year over year to 25,116 vehicles, it was already known that demand remained robust and that chip shortage didn't substantially derail production. However, it was less certain whether rising raw material and supply chain costs would cut into Li's margins, or whether its outlook would disappoint as the company navigates through ongoing supply chain disruptions. As it turns out, Li pleasantly surprised on both accounts as it reiterated its plans to boost production through the construction of its new Beijing plant. Li's triple-digit delivery and revenue growth jumps off the page, but its progress on profitability is also catching my attention. Despite the inflationary headwinds, vehicle margin improved to 21.1% from 19.8% in the year earlier. For some context, EV powerhouse Tesla reported that its Q3 gross margin expanded by 281 basis points year over year to 30.5%. So Li still has plenty of room for improvement here. However, The main point is that Li is becoming more efficient at producing EVs, illustrating that it has the potential to become consistently profitable. Currently, the company is only manufacturing one model, the Li 1 Sport Utility Vehicle, with the 2021 revision launching in May. The vehicle continues to resonate well with the Chinese consumers, as reflected in Li's Q4 guidance. Specifically, the company is anticipating Q4 deliveries of 30,000 to 32,000 after reporting October deliveries of 7,649 on November the 1st. With this guidance representing year-over-year growth of 107 to 121%, the company is clearly expecting demand to strengthen as the year comes to a close. Looking further out, Li has its sights set on a major ramp-up in production by 2023. By that time, its new Beijing manufacturing facility should be completed, supporting the production of a few new models. After launching its X platform for an extended range electric vehicle next year, the company intends to release additional new models in 2023. This will drive delivery growth even higher, although it will likely come at a cost. Vehicle margins could take a hit during the initial ramp-up phase of production. Once sufficient scale is reached, Li's margins should rise and perhaps exceed current levels, depending on the average selling price of their different vehicle models. The main takeaway is that chip shortages and supply chain issues are presently only a minor speed bump for Li Auto. With the Chinese government fully embracing and supporting the push to EVs, the company doesn't face the regulatory crackdowns that are pummeling technology companies in China. Competition in the Chinese EV market is fierce, including Tesla, NIO, and XPeng. But Li's future is bright as it carves out its own space in the high-growth EV industry. Okay, that's my thoughts on Li Auto. I think they look pretty good, and this was a nice move today. Okay, let's talk about catalyst for tomorrow. All right, tomorrow we've got BioMartin Pharmaceutical, ticker symbol BMR, Salesforce, ticker symbol CRM, Zscaler, ticker symbol ZS, Box, ticker symbol Box, Jinko Solar, ticker symbol JKS, and finally, Barnes & Noble Education, BNED. Now, in the Catalyst Watch video, links in the description, I talked about why those companies are on the watch list. So I'm not going to rehash it here. It is on that video. So that brings me to the end. Those are the companies that I wanted to talk about and highlight today. Out of all these multiple stories out there today, what did you find the most interesting? What stock moved the most in your portfolio? Let me know in the comments. I'd love to know. Also, if you do have a question, leave the ticker symbol and your question in the comments, and we'll go over it. Now would be a great time because I have wrapped up what I wanted to talk about today. So I'll just look over here at the winners for today. Now, this is Weeble's platform right here. If you don't have an account to Weeble, you can get 2 free stocks. Link is in the description below. You can sign up for their platform. They are more advanced than Robinhood brokerage. I would say there's more advanced technical charting abilities in the platform. But of course, there's a lot of technology winners at the top of the list today, and there's a lot of crypto blockchain leaders at the top of the list today. Matterport, big winner today. Lithium Americas, they were up 14.7. Bit Digital was up 11.9. We have Fisker, they were up 11.5%. We've got GoodRx, surprisingly up 8.9% today. They haven't been in the news very recently. Of course, Aurora Innovation was up today at 8%, but their competitor, True Simple, they were also up today but not nearly as much. Let's see, we got Riot Blockchain. They were up 7% today. That's good. Rivian, I didn't talk about Rivian. Let me go over here to TradingView and look at Rivian. RIVN is the ticker symbol. Rivian did something interesting today. I'm going to go to the 1 hour chart instead of the daily view here so we can see this a little better. Now, I've been saying since IPO, $100 or less, then this thing could be a good buy. But since, let's see, the 11th of November, the second day it IPO'd, I've had these two blue lines on here between $120 and $125. And I thought that could be a zone for Rivian. It turns out the $120 is a zone for Rivian. It's a resistance zone for Rivian. They're at $119.77, and they're down a couple pennies in after hours. They are using that $120 line as resistance. They get up to it. 23rd, they got up to it. Today, they got up to it, and they're just not breaking above it. So I do find that interesting and quite fascinating. Now, they are finding support around the $106, $107 mark. So that could be an interesting entry point for Rivian. And you could probably, if this pattern continues, you could probably swing this one as it gets down to $100, and then when it gets to the $120, that's a possibility. Hey, Devin, I've been buying ARK-K dips for the last few months. Are you seeing any positive? It's been pretty sideways. There's been a lot of negative talk about Cathie Wood and her innovation funds. All right, let's put ARK-K on the screen here. Let me go to the one-day view. You can see this decline that they were in here. Now, it's been a pretty interesting swing trade because it's been so defined on these bounces. But this last one down here, it doesn't line up. So this could be a bottom. Call it at $100. If you go down to $100 down here, that's the low. The last time was $97. Let's see here. What was this low here? $96. Okay. So absolute basement on this should be right around $100. So I'm gonna put a line right here. That's at 99.71. So it's really close. So in this latest downtrend that it's been in, the past week seems to be finding this support around 104, 105. So I'll put a line there. So a dip into this boundary would be interesting. All right, let me plug in over here. And let's see here. Oh, I forgot about Splunk. They had it interesting. All right. Let's see here. I think Kathy Wood is in her innovation funds. I think she's more right than wrong, and all the negative that she's getting right now. I mean, there's been several articles just written. I think there was one written saying Kathy Wood doesn't understand innovation, which is just completely strange. Let's see here. Kathy Wood had an interview on CNBC on November 24th. That's the last public comment that we have. She thinks the U.S. is moving into a deflationary environment. She's got these pretty strong stances that are in the complete opposite of what people are thinking, what analysts are thinking, and that's what puts this bullseye target right on her for people to talk about. I mean, she's buying Zoom, and Zoom's been going down, so people say she has no idea what she's talking about. I think she does. I don't agree with everything, but I think she's more right than people are giving her credit right now, just because it's hard to see the forest through the trees. And I think Kathy Wood can see that forest through the trees. Let's see. Innovation is helping to solve problems with the pandemic. She thinks this is the beginning of an inventory problem. That's true. She plans to test a new aggressive strategy. I wonder what that could be. Asked why Zoom. Asked why she's adding to Zoom as the stock falls, says the communication system of the world will be replaced. Zoom sales are expected to be about 19% in Q4, despite tough comparable figures. Interesting. She thinks Tesla, Elon Musk, financial advisors are telling him to take profits and diversify. That's interesting. So that's why is Elon Musk selling shares of Tesla? So Elon's not holding all of his eggs in one basket. I also read a story about SpaceX. Self-driving cars are hard work. She would be surprised if Apple Car would come to market by 2024. She is a net buyer of Bitcoin. She thinks portfolio will deliver 33% compound annual growth rate over the next 5 years. See, the thing about Kathy Wood too, and I wouldn't bet against Kathy Wood. I mean, you saw Meet Kevin put the video out about shorting RK, right? Well, I wouldn't go against ARK, not at all, because Kathy Wood's not looking at the next 2 weeks, 2 months, or even 2 years. She's going 5 years, 10 years down the road. So buying into her ETFs, you also have to think about, okay, what is this ETF going to look like in 5 years from now? That's what I think buying into Kathy Wood's ETFs are all about. This is definitely not a short-sighted woman. She is looking far into the future. And you have to, if you're investing with her, you also have to have that same type of thought pattern when looking specifically at her ETFs. I think the inflation concerns make her look more dangerous, but if she's right, it will be big. Absolutely. Absolutely. Yeah, LOL, a little too bold. Yeah, I'd say so. But yeah, I would just see, not everybody is going to think long term when they're investing. And that's what provides the volatility in the market. You have some investors who, maybe they're day traders, so they're only looking at the individual day. You have others who might be swing trading and they're looking at a week or two, right? You may have some who are more focused quarterly. You may have some that are only look at their portfolio once a year to rebalance it. And then you have others that are just dollar cost averaging over the next 5, 10, 20 years. That's what provides the volatility in the market, is everybody is looking at the market differently. They're investing for different reasons. And Cathie Wood's ETFs being down for the year, I think they're still down for the year. Yeah, RK is down 14% year to date. Over the past year, you would have lost 4.8%. But like Cathie Wood says, she says that over the next 5 years, where was it? 33%, she said? Yeah. So she thinks that investing in ARK-K, investing in her fund, you will get a 33% compound annual growth rate for the next 5 years. That's a pretty bold statement. And I have a tendency to believe that as well. So I'm a little more optimistic on Cathie Wood's funds, all of them. I invest in her ARK-X, the space ETF. I invest in ARK-K, and I have some of the ARK fintech and a little bit of the genomics, not too much. I think genomics, that's really early, really early. Long term, I like them. I don't see anything too negative about them. I'm not sure if I'm really answering the question or not, but I'm optimistic about her funds, but I'm looking at this as a long-term investment, not one that I would check on weekly or daily. It's one that you're going to need to, if you're investing in it, this is the strategy that I'm using, is just a very simple dollar cost average over the long term. So, you know, put 20 bucks in it a month, put $100 in it, $1,000, whatever you're doing, whatever's on your plate. Just do a little bit, and over time, I think this is going to work out, because a lot of the disruptive technologies, look at EVs. I mean, it took a decade for Tesla to really start making an impact. So these disruptive technologies, they're slow to market, but they can kick in. I mean, that's the S curve, right? I mean, it is slow to take off and then it just booms. It's in the long hold group. Okay, good. It's more a question of keep adding on dips or just let it run for a year. Depending on your pie, your split up for your portfolio, I would add a little bit on the dips. It doesn't have to be a big percentage, but I would. That's what I'm doing. Just a little bit, not a whole lot. If I had to put a percentage on it, I would probably say maybe around 3% to 5%. Not a whole lot, but enough that, you know, it's there. And the reason it's not bigger than that is because a lot of the funds, a lot of the stocks in her funds, I'm investing in individually anyway. So it doesn't make a whole lot of sense to go any bigger than that for me personally. But it could be different for you. One thing that I would definitely suggest from experience with investing in ETFs is, before you invest in the ETF, look at what the fund is holding. you may be surprised at what they're holding. It may fit with what you're trying to reach, what you're trying to do, or it may not. You may see that, oh, they're investing in, oh, I didn't, whoa, like, why is John Deere on a space ETF? Huh, I didn't know that. That's odd. Well, it's because of the autonomous and satellites, and yeah, there's many reasons why. But you may be surprised. You may already be investing in a handful of them, so then it won't make sense for you to invest in that ETF. So that would be the biggest thing to new investors getting into investing, especially in ETFs. Just go to the ETF page, look at what the company is investing in. You may already be investing in some of the same companies, so maybe you want to trim your position to go to the ETF, or maybe you just want to add a couple more of the singular stocks that the portfolio was holding. That's what I would suggest. And I know that doesn't go to your question, Devin. I'm just putting it out there for any new investors watching. Dip cost average. I like that. Dip cost average. That's a cool one. You should probably put that on a t-shirt. That would be pretty cool. Dip cost averaging. I like it. I like it a lot. All right. Well, I know it's kind of short. Didn't have a lot to talk about today. And I think that's mainly because there was so much to talk about today. I just got so twisted up and I didn't know what to talk about. So that's why it's kind of short, even on a day when there's a ton of news and a ton of companies moving. I think it was just way too much going on that I just kind of found myself just, the more I would read, the more I would read. It would take me to another story, another story, another story, another company, another ticker, another ticker. It was a pretty interesting day, for sure. Yeah. Okay. So if you got anything else you want to ask, go ahead. Otherwise, I'm probably going to wrap it up here. That's all that I wanted to talk about today. Okay. All right. Well, I will wrap it up here then. Let me just say that if you did find the information in this video helpful, informative, actionable, click the like button. 2, share this video. It could help other investors. And the main goal, financial freedom. That's it. That's simple. And then the third thing, click the first link in the description and check out our Patreon page and become a member. That would be very helpful to our research, analysis, technical breakdowns. And then, of course, there's benefits for you as well. So with that said, I'll wrap it up here. Thank you, everyone, for watching. I'll see you tomorrow, 5 p.m., for another go down of the market. Let's see. What's wrong with CrowdStrike? Been cooking down for the past few weeks. Okay, CrowdStrike, they're in the Catalyst Watch video. I did talk about them yesterday. So it would be worth checking that out. CrowdStrike, we got CRWD. CrowdStrike is going through a transition. Let me pull up over here too. So in the short term, I could see them falling. I was a little surprised that it dropped below its 200-day moving average here, but not totally surprising. There is a lot of option contracts right now on CrowdStrike that would suggest a 7% move on earnings day for CrowdStrike, with it being below the 200-day moving average, with the RSI being under, it's at 27.13, that is oversold. I wouldn't be surprised if that 7% was to the upside. However, they are transitioning. So that's going to put a little bit of a short-term negative view on the company. Long-term, I like this company. And in the Catalyst Watch video, I went through what I liked about CrowdStrike long-term. There may be some pain in the short term. Look at them as buying the dip opportunities on the short-term pain. But long-term, this company, I think it's got everything on the right track. With the update to its business, it's going to help it tremendously. Looks like the average price target is $300 or more for the company, with the upgrades and downgrades for it right now. The most recent one was $320. So it's got upside to it. It has a superior cloud native technology. And I think that is going to help propel it forward. But again, that's a more longer term view, like 6 months, 12 months view on the company. With this superior technology that I think it has for the cloud, there's going to be a network effect for it. So that's why it's good for a long-term view, 6, 12 months. Yeah, okay. A good entry point, 215. Let's see. It's been a while since I've mapped it out. I didn't put an entry point in yesterday's video, so let's look here. The most recent dip here, we've got support at, let's see, this looks to be close to $124. I'm going to put a line there. And let's see. Then under that, we have support here at 208. So it looks like we've got a zone here. Let me look real quick here. Okay. Let's see here. Okay. Just checking. All right. So I think the zone here for CrowdStrike is probably going to be 209, 210 up to about 224, 225. That would be my buy the dip zone. If it got in there, that's where I would do it. So I mean, it's at the top of the zone right now. So your 215 is right in the middle of that. So yes, 215 is a good entry point. Typically what you want to do is you want to set a stock alert. Like if you're in TradingView, you can set a stock alert and go on the high side of your buy zone, right? So that way, if it breaks that top support, then you know to watch it carefully and get ready to put a buy order in. that also allows you to see if it broke trend as well. Is it falling, and did it come into the zone because it's a buy the dip opportunity, or has the trend changed and it's now in a downtrend, and it may just go right through the zone and continue falling? So that's why you want to set a stock alert. And in TradingView, you simply just, when you're over here and you click the plus sign, add an alert. Boom, done, just like that. Now I'll get an alert for when CrowdStrike breaks this $225 barrier, and then I know, okay, let's look for the buy a dip opportunity, or has there been a change in the structure or the trend, if you're following me there. So set it for the high side of the trend and then watch it as it comes down. If it gets to your zone, maybe you're putting it at 220 instead of 225 to get to 215. No, that's fine. But have a zone so you can be flexible, because if you just set a hard price at 215, it may get down to 216 and you missed it. So have a zone and set your stock alert for the top of the zone, so that way you know to watch it. That's what I would say. So yeah, there's a good zone right there for CrowdStrike. And if we're looking for support under that, I mean, there may be support closer to 200. But anything really under 200, and it's got to go way down to like 175. INMD is also looking good at these levels. All right, let me plug that in. INMD. Yeah, they have earnings coming up, or they just had earnings. Yeah, we looked at this pretty recently. Yeah, still got the lines on here. All right. Nice pop from earnings, and now it's gotten back down. Yeah, this is an interesting area. If we look at the week prior to earnings, it was finding support down here at about $81 to $82 a share. So that's an interesting area there. And then if you're going to go, if it falls below that support area there, then we're going to have to go down a little bit further really to find any area of support, like 69. That is a pretty big 68. So I'm going to put a line here. So there's not a lot of support in this zone. So if it does break the $80 and get into the 70s, then this thing's got really no support under that. So watch it. If it does break under 80, then I would probably pause on that until it did find support somewhere. But right now, RSI is at 33.97. So it is just 3-4 points away from being oversold. That's what helps to make this look even more attractive at this level, probably between $80, $82 in between there as a buy zone, because it is just almost there oversold. And other investors are watching that too. They're watching that RSI and saying, oh wow, this thing is looking good with the RSI down that low. So that's something to pay attention to as well. All right, let's see. All right, I'm just looking over here for just a quick moment. So volume was down just a little bit today. That's not too bad. RSI definitely has fallen off. which is a good sign here. Okay, that's all interesting. That's all good. And it's got good, the company itself financially, the fundamentals on the company are good. They're good. They've got good EPS growth. The last 3 quarters, the average EPS growth has been good. The last 3 quarters, the average EPS growth has been 178%. That is just great. Earnings are good. 3-year EPS growth is at 70%. So this company looks really good fundamentally. It looks good technically. So yeah, I would definitely say buy zone on this. Let me check one more thing here. Let me check one more place. Just looking for any upgrades or downgrades recently, because I haven't looked in a few days. No, nothing. All right. So analysts are just holding steady. Cool. Yeah, I think this is an opportunity right here. Definitely. All right. Any other companies you guys would like to look at? Just let me know. Otherwise, we'll wrap it up. Thank you for those companies there to look at. Appreciate the questions. Always do. All right. Well, if there's no more questions, then we'll wrap up the stream here. Thank you guys for being here with me. I appreciate it. I love the questions as always. And I'll be back tomorrow, 5 p.m. for another round of the After Hours show. So thank you again, everyone, for watching. And we'll wrap it up here then. All right. Thank you, guys. I'll see you guys in the and girls in the next video. You are welcome. Thank you very much. I appreciate it. All right, guys and gals, have a good night. See you tomorrow in the next video.